Brent Woyat joins me on the line right now. Big fat idea time. Very pleased he's back with us. He's a portfolio manager with Canaccord Genuity Wealth Management. Brent, I appreciate you taking the time for us, but you know this segment. Get right to it. What's the big idea?
Oh, good morning, Mike. Thanks for having me on the show. What I want to talk about today is the buying opportunity in global mining companies.
Okay.
But first, let me provide your listeners with a little perspective on the sector, and then I'll give you 3 key points, if I may.
Yeah, go.
Okay, yeah. So, back in 2014, the global economy experienced a slowdown in economic growth, which negatively impacted cyclical stocks, in particular the global mining companies. The tracking index we follow, it declined by about 60% in 18 months. However, we have to go all the way back to 2011 when the long-term downtrend actually began. If you can recall, some of the largest miners in the world, such as Teck Resources, fell from a high of about $55 a share in 2011 all the way down to $4 in 2016. So it was a real nasty bear market, and some of the major companies looked like they barely would survive. However, in January 2016, that appeared to be the bottom of the current cycle, where the index gained almost 150% in 13 months. So it was a fantastic recovery, but although in the last 3 months or so we've seen a correction of about 20% that we feel sets up the next buying opportunity in this sector.
How did the technical picture look for this, when you're looking at that chart then?
Yeah, technically, the mining index price chart is beginning to show an oversold condition while approaching some key levels where we expect to see some investor demand appear and hopefully complete this mid-cycle correction. So we're anticipating, the next up leg is about to begin and run into at least the end of the year. There may be a bit more downside the next few weeks, but we think it's time to revisit the more liquid miners on a risk-reward basis.
How are you looking, when you look at the historical cycles, how is this fitting, sort of?
Well, it's interesting, yeah. From a purely cyclical perspective, the timing and duration of the 2016 mining sector recovery ran directly in line with the last 3 historical mining recoveries. First one in 2009, post the global financial crisis, 2003, post the tech crash, and in 1999, post the Asian crisis.
I can see the analytical background. Brent is a portfolio manager whose background's all analytics or analysis, so I'm sure this is standing you in good stead for this. Bottom line is you got to look at global growth. What's your outlook there?
Yeah, so the global economy continues to expand, and the International Monetary Fund has recently confirmed a stronger economic outlook to the end of 2018. This has been driven by a recovery in the emerging markets, while putting a floor under commodity prices in industrial metals such as copper, nickel, aluminum, and zinc.
Well, obviously, we've only got about 30 seconds left here. Obviously, lots of ways to play this or to invest in this. Can you give us an example?
Sure, exactly. There's a handful of good quality companies that could be bought to gain exposure to the sector. However, in order to gain more diversification, we would be looking at exchange-traded funds. One that we are interested in is the iShares Global Base Metals ETF. It trades around $11 a share in Canadian dollars on the TSX. The symbol is XBM. It has about 28 holdings, including some of the world's largest miners, such as BHP from Australia, Rio Tinto from the UK, Freeport-McMoRan from the US, and Teck Resources from Canada.
Okay, we'll leave it at that, Brent. That was for, looking for capital appreciation. Brent Woyat, portfolio manager with Canaccord Genuity Wealth Management.